I mean, you got to be the most busy man on Wall Street right now. It's just compiling a list of what you're currently working on. You have 2 publicly traded equity funds now, a publicly traded asset manager, a publicly traded real estate company that you're working into transforming a mini Berkshire Hathaway, and you're running a campaign with Universal Music Group. Where's your attention most focused on right now?
On investing. They're all related. They're all correlated. They're all part of one very small portfolio, which is why it's possible.
It is possible, and I know you run with a slim team there, so it's always impressive. And you got this IPO out last week, and we talked about it, but we talked before it started to trade. I know you don't concern yourself with a day's worth of trade or a few days, but what do you make of the reception that it got, that it did fall considerably? Is this an issue with bankers mispricing it?
No, I mean, we sold a pile of cash. I don't know why anyone would buy a pile of cash and then the next day sell it at a discount. What I think I didn't appreciate when we last spoke is we did something different in this offering that people don't normally do. Normally, retail investors get kind of a very small allocation, and they're disappointed by the shares they get in an IPO. In our case, we gave the retail investors what they asked for, and we cut the institutions back. And I think the impact of that was retail investors woke up with more shares than they had intended to buy, and were put in kind of a forced selling position, and that has to work its way through. I think once that's done, I mean, now, again, the package of securities is modestly down from where we priced the offering. Remember, you get an interest in a TSUS, which is you think of it as an investment holding company, you can think of it as a closed-end fund. There you're getting $49 in cash that we're in the process of deploying in the market. And you get an interest in our business, which is a very good business. It's a bit like a Blackstone or a KKR, but some important differences. Substantially all of our assets are in these sort of permanent capital vehicles. And so the business model itself is like owning a royalty on compounding. And so that's why all I have to do is focus on generating returns. I generate returns. That generates an increase in our assets. That generates more cash flow for the business. And it's a bit of a self-fulfilling prophecy as long as we do a good job allocating the money.
One of the things that's different, and I kind of hinted this at the beginning from the other big publicly traded asset managers, is just how slim you are. And this was brought up actually in one analysis of Pershing Square.
I like being slim.
I think we all do. I think, especially in this day and age. But this idea that there is key man risk, because so much of it is your ideas and your ability to fundraise.
It's not true.
So talk about that. How do you mitigate it?
I actually think we have the least key man risk of any hedge fund in the world. And that sounds surprising because usually you put me on I do more TV appearances than other Pershing Square employees. But what causes a hedge fund to go out of business is something happens to a key person. And then investors, the first thing they do is they ask for their money back. And then the assets shrink and the rest of the team leaves. In our case, the assets are in these public corporations where the money can't leave. And so if something happened to me, the money stays. If the assets stay, the team stays. The team owns, 45% of the business, right? So the company equity is widely spread throughout the firm. And it's unusually about our firm, in an industry where there's a lot of turnover, there hasn't been a Pershing Square. So my CIO, Ryan Israel, and I, we've worked together now 17 years. He's been CIO for almost 4. If I disappeared tomorrow, nothing would really change. In the early days of Pershing Square, I generated most of the ideas, and I worked with analysts on analyzing those ideas. Today, I'm generating a minority of the ideas. So I'm not saying I'm unimportant. Hopefully, I can still, generate value for the firm. But the firm itself is very robust. It's the only firm in the world that if something happened to all of the employees, because the assets are forever, the board would just hire a new team or put the assets in an index fund, and you'd still build a very valuable kind of business over time. So it's one of the most robust businesses in the world, and it's one of the highest quality businesses in the world.
By the way, just kind of on a similar note, as a Warren Buffett fan, this past weekend was the first Berkshire Hathaway annual meeting where Abel was at the helm. You're obviously a young man, but have you thought at all about setting up succession, what that eventually looks like at Pershing?
Well, I think it's really effectively set up. Identified as CIO, Ryan, as I mentioned. He's really leading the investment team at this point. Ben Hakim, president of the firm, he kind of runs everything other than the investment side of the operation. It's amazing there's anything for me to do. I have the privilege of thinking about big ideas, and occasionally a big idea drives some value.
Can we talk about one of those big ideas?
Sure.
In Universal Music Group?
Yeah.
You come forward with an offer to buy this company, and a lot of people scratch their heads. Why would you do this with a company that has very large majority shareholders, where it's tough to put through? What is the game plan?
Actually, the game plan there is absolutely we need the support of Bolloré Group, but what we're proposing, I think, is very much aligned with what they're interested in. I mean, Universal is sort of a interesting case of a company that's done well in its core business, right? Universal remains the dominant company in the recorded music industry. They remain a very close to being the #1 company in the music publishing industry. The company's done a very good job with that. But they've not sort of graduated from operating like a private company into being a public company. And they've lost, I would say, the confidence of kind of the shareholders and the analyst community, which is why the stock, the business value has grown and the multiple that people assign to the earnings of the company has declined. And the result is a stock that trades at the same price that traded, the company first day of trading was 25 euros, and this is in September of 21. Here we are almost 5 years later. The stock is 19 euros, 18 euros. So that's not a good performance. The company really needs a reset. It's also listed really in the wrong exchange. It's really a U.S. Company. So our transaction moves the company from Amsterdam to a U.S. listing. That alone is meaningfully value creating. We kind of recast the balance sheet. The company has unmonetized assets on the balance sheet. Their stake in Spotify. Now, notably, the company announced in the last couple of days that they're going to sell half their interest in Spotify. We think they should sell the balance. The company announced a more aggressive buyback program. We think there's an opportunity to do more. But our transaction effectively enables a cancellation of about 17% of the outstanding shares, a migration of the company here, a new board of the directors led by Mike Ovitz. Mike, I've known a very long time. I think he can be a very value-added to the operations of the company. And then just a better program in terms of how the company communicates with shareholders. The company right now is sort of analyzing the proposal. We'll hear back from them soon. We've been engaged with obviously the big shareholders.
And you're hopeful that they will be receptive to this?
I mean, the company has to do something. This is a very good solution to the various issues that confront the company.
By the way, on this idea of European versus U.S. exchanges, it feels like that is something that a lot of companies see that they can unlock, that they move to a U.S. exchange. On the day we talked, for example, I had the AstraZeneca CFO, and they did something similar. And does Europe have a real problem, Bill?
I mean, yes. Look, the exchanges are natural monopolies. And, if you're not listed in a market which has the most demand, your cost of capital is going to be higher than it should be. And so and I think, Europe has too many exchanges. If I were in charge of Europe, I would consolidate the London Stock Exchange, Euronext, kind of bring the various exchanges, because again, it's a natural monopoly and you want the maximum liquidity and demand in one place. But there's sort of nationalism, I think, prevents that.
One of the kind of newer features of markets is the prevalence and the explosion of betting markets. And there's been this real criticism that we're seeing almost a casinofication of the world, where you can bet on anything. There are ETFs listing this week where you can bet on whether the Dems or the Republicans are going to be winning the House or the Senate. Is it a problem? Does this concern you at all, this trend?
I think the negative is that there's a positive and a negative. I think the negative is it's not the most productive activity in the world, and there is a lot of gambling that goes on, whether it's sports betting or otherwise. And there are people, and particularly young people, losing money they can't afford to lose, betting on the outcome of things that are difficult to predict. So that's obviously the unfortunate. It's a bit like lottery tickets. It's a net loss, I think, for society. On the positive side, what betting markets allow is they allow people to hedge risks that they're exposed to. It also creates information. Looking at where things are priced. The betting markets have done a better job of predicting outcomes of elections.
Some could say because, well, maybe not elections, but there's more insider trading, that incentives exist for that to happen.
Yeah, look, the people make arguments that the insider trading should not be illegal because that would bring a sort of more transparency.
Are you one of those people that believe that?
I'm not, but you can make some arguments for it. So I think it's sort of interesting. But the more the market becomes casino-like, I think the risk is, I guess, people they withdraw capital because they lose confidence.
Right.
I think markets are becoming more and more short-term. And if you think about what a stock market is, these are very long-term assets. So the short-termism drives liquidity, which I think on the margin is a positive. But it also can lead to short-termism in the way businesses are run.
Bill, I would love to just leave on the note of your hometown city, New York. There's been a lot of discussion about Mayor Mamdani making very public pronouncements against specific people, against Ken Griffin, announcing a pied-à-terre tax, directly attacking some of the business leaders of this city. I know you were concerned heading into this election and the outcome of it, too. How are you feeling now?
Not great about things. I mean, I think Mamdani is not, if your goal is to make New York City kind of financially solvent, what you don't want to do is drive out the Ken Griffins of the world, right? Ken brings very valuable business. That's, has a $6 billion project, which will generate, thousands of construction jobs, architecture jobs, marketing jobs, make your list. Employees who will pay material amounts of taxes because they're highly compensated employees. And it's sort of the Wall Street and the tax revenues from Wall Street are what enable New York City, kind of all the people in New York City to have a better life.
Right.
And if you drive out the Ken Griffins of the world, who notably, has made a major contribution to New York, not just from bringing his business there, but he's been very philanthropic, a $400 million donation to Memorial Sloan Kettering, which is an institution that doesn't just help New Yorkers, it helps people with cancer all over the world to get treated there. So it's not a very smart approach.
By the way, I can't think about Pershing Square without thinking about New York City, but could you ever see yourself being driven out of New York?
I think it's unlikely. I'm more the kind of guy to fight to make sure New York City is a great city than someone who's going to leave.
The problem is, though, that with these policies, even if they have dire economic consequences, Mamdani is incredibly popular, and he's still very popular with his base. So how do things change then? How do you fight this tide if there still is this broad-based popular support for these types of ideas?
It's an issue. I mean, I think the answer is a better candidate look, where Mamdani was correct is that New York is not a very affordable place to live. But you're not going to make it more affordable by getting rid of the biggest drivers of tax revenues for the city. Mamdani already has a budget crisis. Well, we got to figure out how to run New York City much more efficiently. But when you raise taxes, the most mobile people, frankly, are the Ken Griffins of the world. Ken can choose to locate his business wherever he wants, and he can locate his pied-à-terre wherever he wants.
Very true. Though we are heading into midterms, and again, affordability is on the ticket, and that's pushed a lot of people left. Are you worried about how this shakes out, that we might get more candidates who want to put forward these types of ideas into economic policy?
Yeah, look, I think you look at a country like Argentina and how far it fell. Right, one of the most Argentinian GDP, 100 years ago, was one of the most significant countries in the world and fell off the map because of socialism and other bad policies. Now you see Malay coming back and the country dramatically recovering. It's sort of a great example. And it's crazy to me that socialist ideas can travel into a country like this one.
I have only about 30 seconds, but I'd be remiss if I didn't ask about some of the work that you've been doing trying to make 401ks, those types of investment vehicles, more broadly accessible. We had an executive action last week. What are you pushing for at this moment?
I think every American has to own a piece of capitalism. And when you do, you're excited when the stock market goes up, and it allows you, power of compounding allows you to save for your retirement. Unfortunately, wages cannot compound as fast as the stock market.
Right.
And so I think it's very important for every American to participate in capitalism, or we'll end up in socialism. So I think the president's plan is a great one. You have to be able to, I think if you believe that you're going to be able to retire comfortably, maybe even leave something for your kids so they get a head start, that makes you believe in the country. And if you can't, it makes you angry. So I think a very important program.